More records on Wall Street thanks to better than expected earnings from Caterpillar and 3M, particularly yesterday. Adam Johnson is the founder and the author of Bullseye Brief, and he joins us now. Adam, you called Dow 3,000 points ago. And now we're, what, 559 points away from Dow 24,000? Where are we going next?
Yeah, we are going to hit 24,000, Lauren, and I tell you why. It's the same thing I've actually been saying since Dow 20,000, the two E's, right? Earnings and employment. And we get more evidence of that today with continued earnings, especially in the Dow Industrials. And by the way, Lauren, I think we're going to get Dow 25,000 as well, because I do believe we are going to get tax reform. As we heard from the budget director just a few minutes ago, I also agree. Bob Corker is not going to vote against this tax deal simply because he doesn't like the president. That's a sideshow. We're just watching another episode of The Apprentice play out, and we know who wins.
So your argument is that the political infighting in the Republican Party will not derail the Trump agenda, and no. Thanksgiving week, perhaps, when we see what a bill actually looks like for tax reform, we see the Dow go to 25,000?
Yes.
All right.
Yes, that is my call. Dow 25,000. 24 is the earnings and employment call. Yep. We get tax reform. That's a kicker. That gets us to Dow 25,000.
Let's talk about earnings, because we're, what, a quarter of the way through Q3 earnings season. 71% of companies coming out with better than expected results, and we hear from three Dow stocks today. Boeing is the one I want to talk about first, because this is the best performing and the most expensive Dow stock in 2017.
Yeah, and I'll tell you why. It's a great American story about a company doing just about everything right, Lauren. As a matter of fact, for my Bullseye subscribers, I just wrote up a company called Dassault Systems that does all the software that, enables you to design things like Boeing fuselages and engines, et cetera, on your computer. And then what it does is it actually prints the parts for you so you can make them on site. Boeing just signed a big deal with Dassault Systems. In other words, they're now printing aerospace parts on site. It saves money, about 20%. The parts are lighter, so you can make a more fuel-efficient jet. There's so much that Boeing is doing right. Absolutely love the story. I know it's a very expensive stock, but you know what? You're paying for quality, and you're paying for just a great story.
All right. So you're loving Boeing, but
yes.
You don't like, I was reading your notes, you don't like Coca-Cola.
No, as a matter of fact, decided to go short Coca-Cola about 2 weeks ago, right here around $46, and I tell you why. It's trading at 25 times earnings. That's a premium to the market, which is only about 18 times earnings. And there's not been any earnings growth for 4 years. It's actually been flat to down 4% on earnings. They might finally make some money next year, not this year. And by the way, next year, it would only be about 2% growth. So why would I pay a premium for a company that's not growing? And they've been selling assets. Unlike Boeing, which is buying assets, Coca-Cola is selling assets. No reason to get excited. I'm short.
And let's wrap this up really quickly with your thoughts about GE. Those shares, a 4.5-year low yesterday. Concerns about the dividend. Is this a good time to, A, buy GE, and does it stay in the Dow, is my second part to that.
Yes and yes. Buy GE. I just wrote it up. I like the restructuring. I like the fact that it's down 30%. So we're coming in and buying a premier company at 16 times. It lost its way under Jeff Immelt. He should never have stayed there that long. CEO John Flattery's in. I love it. Buy GE.
Well said, Adam. Good to see you. Thank you.
Thank you.